Hello, Chiranga sir, can you hear me?
Yeah, Natasha, can hear you.
Right. Okay. I will make you the co-host, sir.
Yeah, all right. So I will share the screen. Uh, can I know that it is shared now?
Yeah, I made you the co-host. Yeah,
Mhm.
it's sharing now.
It's screen can see, right?
Yes, we can see the screen.
Okay, good. Right, Natasha. So
Right. We have started recording as well, sir.
yeah, all right.
Right. Okay.
Okay, good. Right. Uh, Thank you for joining with the 10th lecture. I hope that you completed most of the areas under this uh, audit subject. Basically, we are focusing about today auditing fair value estimation and disclosures. Uh, Firstly, I should uh, explain what is the content we are going to discuss here, and I want to recall this whatever the things we discussed last two lectures as well. This will be the last lecture I'm conducting. Anyway, so we can have a wrap up. Uh, you know, uh, Content as well with you, so you can ask questions. You can clarify things. I hope the engagement of this virtual meeting is really important. If you can ask questions, if you can engage with me, that will be very effective. Otherwise, uh, doing virtual lecture is a very difficult rather doing a physical lecture. So actually I wanted to do this lecture physically because I wanted to discuss most of the practical stuff with you, and any other questions or any advices I can give you all to continue your journey as auditor, or getting audit training, or whatever the field you are in. Uh, so I wanted to make it physical anyhow because of this. Give me a second. Hello, sir. Yes, yes, yes. Sorry for calling this time, sir. So it is sorted. Okay, right. Okay. Ah, thank you. Thanks a lot. Okay, right. Sorry. Um, Advert sir call and asking the status. Uh, Thank you for actually joining. I think we are having how many students? Around yeah,
24, sir.
24 students, no? So that's a good number. So you all can share this knowledge with your friends, right? So today I'm going to discuss very important topic. Basically, all audit procedures relating to fair value estimation and disclosure. That's a core area we are focusing as an auditor, right? Fair value is a very judgmental area. You know that fair value is estimate basically, and we are referring estimate auditing standard here. And before we are jumping to the audit procedures, I'm planning to discuss with you all about fair value. What's the definition? What's the guidelines given through SFRS 13? And what are the approaches we do have and how we can do that? And basically, the disclosures, required disclosures, having that foundation, that will be very helpful to uh, you know do the auditing. Without having a CFRS 13 knowledge, we can't do audit in this area, right? uh, I will explain why it is an important topic, right? So fair value we are discussing here and there. Here and there mean uh, many standards, many account balances, and different different standard requirements are there. And basically we can divide it to two categories. Some of the standard it is required to do fair valuation, right? Some standard is an option. You can, the management, the finance team can decide whether we are going to do fair valuation or not, right? So example, PP&E, you know that well-known standard. Once you are doing PPE disclosures, you can use cost model or evaluation model, right? With the IP or intangible assets, it is option. You can use fair valuation or not. You go with the cost model. That's the option. But once you are moving to maybe biological assets or some other maybe uh, financial instruments, share-based payments, you have to do the fair valuation, right? So it is a requirement. There's no option. You need to do that fair valuation. So once you are having both scenarios as accountant, you are having uh, you supposed to do that fair valuation, and it should be accurate, and then it should be disclosed in the financial statements, right? And then what's the, as auditor, what's the risk we are involving with? That is the concern, right? As auditor, you know that we are usually giving assurance over these values, right? Maybe the statement of financial position values or P&L balances. So whatever the fair valuation that will impacted mm, each and every financial statement elements, right? So cash flow statements we are having disclosures. Equity statements also can be impacted, right? Disclosures heavily impacted, and then P&L and the balance sheet. You know that once you are doing fair valuation, the gain or losses will be parked in P&L or OCI, right? The balance sheet, the value will be displayed in the balance sheet. So each and every element of the financial statement will be impacted, right? So then it is very important to have proper knowledge about the standard requirements, right? Different standards giving different requirements, but we are having a common standard, common guideline, that is about a CFRS 13. That is about a CFRS 13. CFRS 13 actually, it's a very, a very sound, very strong standard, has given uh, very meaningful definition for fair value, as well as it is clearly mentioning how we are going to do fair valuation, and then what are the techniques, and what are the levels, what are the disclosures, everything. It was given. It is very clear that how we can follow it, right? Before this standard, actually we didn't have this type of sharp definition. Before this standard, fair value definition was very, vague definition we had. So we defined that fair value as uh, the price we are, arm's length price we are using for transaction. We were struggle to find this arm's length transaction. What is a arm's length transaction? Your arm's length maybe differs with the other's arm's length, but fair value should be a universal number. If you are disclosing as a fair value, that should be equal to others' fair value. Reasonably, that should be matched. Then this standard setters wanted to have a very strong definition and guideline. That's why we are having a syllabus 13. Syllabus 13 is a very important as well as a common standard. What do you mean by common standard? I think you know, right? Common standard. Common standard mean normally once you are having standards, we are having very specific standard, balance specific standard and common standard. Inventory, LKS 2, PP&E, investment property, biological assets, borrowing cost, all these relates to specific areas. LKS 20 government grants, right? All these specific standard that will address a specific area, specific balance sheet item or P&L item. But fair value is a common standard, common guideline we can use for several standards, several areas, different balances, right? For liabilities, assets, maybe long-term asset, short-term asset, you can use this standard as a guideline. So very important standard to learn, right? As a student coming from, hello, yeah. Right, right, mama share karana. Okay, okay, right, right, okay. uh, right. So I will recap your memory. I will recap your memory about syllabus 13 first, right? So recap mean I assume that before we are going to auditing in fair valuation, you know you should know the guideline, right? As auditor, you need to be very equipped with standards, right? Auditor කෙනෙක් වෙන්න මොකද වෙන්න ඕන? accounting හොඳට පුළුවන් වෙන්න ඕන auditor කෙනෙක් වෙන්න. ඇයි හරියට කරාද කියලා බලන්න benchmark කරන්න නම් you should know the accounting standard. So then I will recap very quickly about SLFRS 13 and then we'll move to audit procedures, right? Audit procedures and practical scenarios. I have mentioned here very, uh, industry examples, maybe different industries, different balances I have mentioned in the slide deck. So I want to quickly go through all these practical examples as well. So firstly, we'll learn about this CFRS 13 fair value requirement, right? That's pretty straightforward. We can go to the uh, this is the content, right? So end of the lecture, definitely you are equipped with these four areas that's under the syllabus content. So we'll check at the end whether we are equipped with these four areas. uh, we'll come back to this at the end, right? And definition. So fair value measurement standard, it is very clear that this is a very sound definition, right? Sound definition that is about the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participant at a measurement date. Fair value, once you are getting a fair value, what are the things we do fair value? It may be asset or liability, right? It may be an asset or liability. We do fair valuation. And once we are doing transaction relating to that, for asset, uh, so we are receiving cash, right? For liability, we are paying cash or transferring uh, some items to liability, right? For that, what is the price you are using? And that transaction should be an orderly transaction. What do you mean by that? So as a accountant, that should be justified. Once you are going to the audit step, we need to justify whether it's an orderly transaction or not. That's why we are learning this. The auditing base is this definition, That's why we are learning that first, and then we can move to the audit procedures, right? How to ensure that it's an orderly transaction or not. Orderly transaction. So normally in an organization, once you are doing transaction, those should be to the fair value, right? To the fair value. Otherwise, it will be a related party transaction. If there's a bias transaction, there's a there's a management override of control over the transaction. That may not be a fair value related transaction. It should be orderly transaction. Orderly transaction means basically the market participant should have a proper knowledge and you know ability, independent, willing about the transaction, right? It can't be a pressurized transaction, or else it can't be a transaction without entering into a without the knowledge. If you are entering into a transaction, it won't be a orderly transaction, right? Let's say you are entering to a transaction, you don't know the quality of that item, you don't know the value of that item, maybe the content, maybe the place, maybe the quality. You are not having any clue about that. Let's say you are purchasing a vehicle, you don't know the to evaluate, to test the inside, uh, technical technical stability, and maybe any technical faults are there, maybe the accident hit history. You don't have a understanding about that. For that, we should have a technician support at the point of transaction, right? If you are enter into a transaction without having that knowledge, you are not a knowledgeable person. It means it is not a orderly transaction. I hope that is clear. Let's say you are entering into a transaction uh, for maybe a different pressure. So let's say you are no එකපාරට මැරි කරන්න සිද්ධ වෙනවා නේද? දැන් ඔයා plan කරන් හිටියේ යුනිවර්සිටි ඉවර වෙලා maybe after 2 years ඔයා settle වෙලා මැරි කරන්න. But suddenly you are deciding to marry. Uh, එතකොට ඔයා මොකද කරන්නේ? So you want money. Now you are planning to sell one of your property which was received from your parents. Uh, so you are planning to sell it immediately. So what is the price you are now planning for that? So you have a pressure, you want money, you are supposed to have the wedding maybe within another 2 months. So selling a land maybe not that easy, right? So the price and your negotiation will lead through some type of a pressure. So that is not an orderly transaction. That price can't be taken as a fair value. So now you have a kind of a challenge as an auditor. How can justify this? How can challenge to the management? It is really difficult. It is very judgmental, right? That's why we are paying special attention on fair value related balances, right? So auditor having a high risk about what? High risk about valuation accessions, not the other accessions, right? Valuation accession is the concern area. Concern area, right? We know that uh, auditor doing a assurance service on accessions, right? We are verifying accessions. Once you are verifying accessions, we are having a risk. What is that risk? Accessions related, transactional level related risk. So that is called audit risk. We expect they are doing correct valuation about fair valuation, right? But there's a deviation. What do you mean by risk? Deviation from your expectation. You expect to have correct fair value in the financial statement, but management may play around this fair valuation. Why? They can easily play around that this fair valuation by using inputs, by using different techniques. They are changing numbers, they are changing the financial position as well as the performance of the entity. So for that, definitely we should have a proper understanding about the techniques, the definition, everything you should have, right? Because of that, auditing fair valuation may not be that much easy, right? Then I hope that you are clear about this orderly transaction. You can get many examples, right? Orderly transaction. uh, yeah. Then market participant. Market participants mean between market participant, buyer and seller, buying party and selling party. So parties may be many, but we can divide it into two parties, right? Buying party, selling party. Buying party may have maybe uh, 10 100 people may be there. That's buying party. අපි මෙහෙම හිතමුකෝ. You are selling maybe a lecture. ඔයා sell කරනවා lecture එකක්. lecture එකක් sell කරනවා කියන්නේ lecture එකක් කරනවා. lecture එකක් කරනවා නම් ඔයා pay payment එකකට lecture එකක් කරනවා නම් you are the seller, right? buyer buy කරන කෙනාගේ parties ගොඩක් ඉන්නවා, right? students ලා ගොඩක් ඉන්නවා. If it is a buying party having more people, selling party having one person, but we are having two parties. That's why we are using between. Otherwise we supposed to use among, right? That's why we are using between. Okay. And then uh, market participants clear, and the measurement date. So then fair value can be taken to different dates. It may be balance sheet date, it may be transaction date, it may be measurement date. This value should be at the measurement date. Keep remember that. That is not the transaction date. Your fair value may be changed at the transaction date again, right? So you need to get the value as at the measurement date. That's very important. So if it is a sensitive item, sensitive, you are doing a transaction, you are doing the valuation by using uh, a very sensitive input. If it is so, your measurement date value may be changed at the transaction date, right? So be careful that you have to get the value as at the measurement date. That is all about fair value. Okay. So I'm not going to discuss further on this. You can refer some of the reading materials, right? So you can be familiar with this definition. Keep remember this highlighted areas, highlighted, uh, topics. Topics mean the uh, words. You should include that to the fair value definition. That's very important. I have mentioned here different aspects relating to fair value. As I mentioned, fair value is a market based measurement, not an entity specific measurement. That's why I told you it is a universal concept, right? The fair value for you, to your friend, to your parents, to your maybe neighbors, it should be same. So X company to Y company, fair value should be equal. There can't be significant deviation. Otherwise, financial information will be misleaded, right? ඔයාගේ බිල්ඩින් එකක් තියෙනවා හොටෙල් A එකේ. හොටෙල් B එකෙත් බිල්ඩින් එකක් තියෙනවා. So you are doing fair valuation. So hotel A, same building, hotel B, same building. If you are come up with a very different value with the other company, may not be comparable, right? That's why we are telling that fair valuation is a universal concept. It is not an entity specific concept. It is a type of a concept. uh, we are using holistic concept, right? We are using for no, for the world. Your value may not be depend on the entity, right? So that is specific to that item, as well as it should be done based on a common approach, right? Common approach. Um, and then it should be assumed that market participants are not forced into the transaction. That's why I told you it should not be a kind of a forceful transaction, right? There can't be any pressure. It should be done in a free uh, activity. It should be done as a free activity in the market, right? It can't be a type of created transaction. Okay, so those are the things we need to identify. And especially, let's say, uh, once you are doing this audit fair valuation, to get this fair value gains to your books, what they are doing different fair valuation, different inputs, and different prices. They are showing different transactions. Once they are showing their transactions, some of them may be related part transaction that can be created, right? That's the issue. දැන් ඔයාට කියනවා මේ ඔයාගේ ඉන්වෙස්ට්මන්ට් ප්‍රොපර්ටි එක වැලියු කරනවා. ඉන්වෙස්ට්මන්ට් ප්‍රොපර්ටි වැලියු කරනවා නම් ඩිෆරන්ස් එක කොහටද අපි ගන්නෙ? We are getting this difference to the P&L, right? Not to the OCI. If it is a valuation for PP&E, we are getting to OCI. If it is IP, we are getting to the P&L. You want to increase your profitability in the year, within the year. What you are going to do? You are showing very higher value to the IP. So then auditor asking how you are justifying this value. This may be a building or a property, right? Building or land. Uh, you are showing the perpetual value this much, and square feet value of the building this much. This is the valuation, and you can challenge. Once you are challenging, you are asking the recent transaction within this period. Can you show me some of the examples? You can create a transaction, right? You can create a transaction easily. In a similar property, you can sell to a related party. So once you are having that type of example, you can say that this is not ordinary transaction. You can challenge it. That's why we are learning this standard, right? So before we are going to the audit procedures, I will tell you what are the exact audit procedures, what is the approach, uh, the giving specific audit procedures may be very difficult, right? Fair valuation, areas to balances, to company, valuer to valuer, their technique, their approach may be different, but auditing approach, audit process of fair valuation is same. So today, end of today, definitely you are learning that, right? Okay, cool. So we'll go to the definition furthermore. Uh, that's very important. Measurement date, as I said, it can't be. It could be reporting date or acquisition date or date of transaction, but measurement date is a very important. So sometimes it may be differs. Reporting date may be differs with the measurement date. You need to get the measurement date, right? Measurement date will be reporting date or acquisition date or transaction date. So the fair value should be depend on the measurement, right? And then here valuation techniques. Basically, we are having three valuation techniques: market approach, income approach, and cost approach, right? So it is definitely we have to prioritize. If we having more information from the market approach, we need to stick with the market approach, not the income or cost approach. So we should select this valuation technique based on the situation, the scenario, circumstances, right? So once you are getting that decision as a management, we need to justify that whether this data sufficient enough for the valuation. That's very important. And we need to maximize the usage of observable inputs and minimize the unobservable inputs. So we are having three techniques. What are they? Market approach, income approach, and cost approach. Once you are selecting this technique, we need to consider the situation, the area you are doing fair evaluation, and the data you are using. So whether we can observe that data or unobservable data you are using. You can use both data, but you have to prioritize observable data. Why? Why we are supposed to prioritize Why we are supposed to prioritize? Because as a accountant, we need to prioritize observable data, because once we are getting that observable data, we can justify that value easily to stakeholders. And stakeholders, we don't need to justify. Once you are seeing that balance, stakeholders can verify from the market easily. That's why we are using observable inputs more. We have to prioritize that. If you don't have observable input, let's say අපි ඉස්සරහ slide එකේ කතා කරනවා, first we need to check whether it is having a active market. What do you mean by active market? Active market means that item, that asset, that liability having a identical price as at that point. Identical price. It means for that specific asset, we are having a market value. But active market, the classic example is share market, Columbus Stock Exchange. Other than that, we don't have active market here. So that is the example, right? So let's say you are having a table. ඔයා දැන් table එකක නම් ඉන්නේ. ඔයාගේ table එකට active market එකක් තියෙද? active market එකක් නැහැ. ඒ කියන්නේ ඔයාගේ table එක හිතන්නකො අපේ ජපුරේ තියෙන table එකක්. ජපුරේ SBTF3 hole එකේ මේ තියෙන table එකේ value එක දැන් අපිට පේන්න ඕන this is the value කියලා. එහෙම market එකක් නැහැ. It is not active market, right? If you don't have active market, first you need to give the priority for active market. Definitely, if you are having listed shares, you are having active market. Other than that, you don't have active market. What you are going to do then? So you are checking, is there any similar market, right? Similar market, and go there and check whether we can get the value. If you don't have a similar market, similar items in the market, what you are going to do? So you can use sometimes maybe cost approximation, right? Cost replacement cost can be used, right? If you can't get this cost income or fair value, the market value, what you can do? You can use a fair value model. The calculation type of thing can be used, right? So once you are using a calculation type of thing, it will be a very technical, right? So you may use some inputs. Your inputs may be unobservable, right? So that will be very complicated. As auditor, you supposed to do different audit procedures if you are using a valuation model, right? If you are using maybe the market approach, you can be easily you can refer with the stock market, and you are having very less audit procedures. You can independently go to the stock market and check the value and cross check with the number of shares, and you can verify. But if you are using a model, එතකොට ඔයාට නිකම්ම ගන්න පුළුවන්. ඔයා ඉන්වෙස්ට් කරලා තියෙනවා කියලා හිතන්නකො listed shares වල 1,000 shares in the listed company, 1,000 shares in the private limited company. What you are going to do then? Listed shares you can easily verify. Private limited shares is very difficult to verify. Why? Private limited shares, it is unobservable, right? What you need to do is you need to do some share valuation or earning per share valuation or beta factors, different techniques you need to use. If it is so, your approach should be selected, and you need to decide, you need to prioritize observable inputs first. Keep remember that, right? That's the learning point. uh, once you're auditing, we need to check this. That's why we are learning here first this SFRS 13 guidelines, right? Okay, cool. Once you are using these inputs on observable and unobservable inputs, you can classify this valuation into three buckets. So level 1, level 2, and level 3 valuation, right? I think you are familiar with these things. I'm not going to teach you all one by one. Level 1, so if you are using active market, definitely this is level 1. Level 2 mean similar asset in active market or identical asset in active market, or observable inputs that are not prices. So observable input that are not prices. What do you mean by that? Some inputs you are using for the valuation, it is not a price. It is not a price. What do you mean by that? Sometimes uh, market market yield you can get from the market, but it is not a price, right? Uh, uh, yeah, some other things, uh, mortality, right? Or sometimes uh, hatchability, right? Let's say you are doing a fair valuation for a biological asset, right? Biological asset, uh, maybe parent birds. For parent birds you can use a fair valuation model. Once you are getting fair valuation model, this mortality of these birds, the hatchability mean hatching processes. They are hatchery mean uh, what's the singular words for that? Hatching mean birds lara කියන්න නේද? Once you are having eggs, these parent birds, to get the bird, the small chicks, we need to hatch. ඒකට කියන්නේ this අර bird එතනම ඉඳන් මේව කරන්න මොනවද ඒකට කියන්නේ රකින්නවා කියලා නේද? So that is a hatchery. So in the farm, definitely these birds not be looking after these eggs, and this parent birds is not doing that. Once you are having the egg, all these eggs transfer to hatchery. It's a separate place having different temperature. The artificially we are doing hatchery process, right? So hatchability, there's a percentage in the market. Percentage is there for hatchability. If it is so, it is a maybe 95% hatchability. So if you are sending 100 eggs, 95% eggs may produce chicks, right? It is sure. So 5 තමයි එකෙන් නැති වෙලා යන්නේ. 5 තමයි effective නැති eggs තියෙන්නේ. It is a kind of a norm in the egg market, right? So if it is so that kind of input, what is that? That is an input. It's an unobservable input in the market. It is a observable input, sorry, observable input, not a price. Not a price, right? So those are the things you need to focus. uh, this level hierarchy very important, right? Once you are doing disclosure, to have this level 1, level 2, level 3 understanding is really important, right? Then and there you can do the disclosures. And then uh, significant judgment to level 2 input would be lead to level 3 categorization. Sometimes you are considering that as a level 2, right? Sometimes you are considering that as a level 2, but still you are using significant judgment, right? Significant judgment, let's say in the market you are having three different prices, very different to each other. So you are having significant judgment and you are taking one, right? You are taking one and you are doing some adjustment to that, maybe some loading, some beta factor or some risk element, right? You are adding something. To do that we are having some type of calculation. If it is so, definitely it will be a level level 3 valuation, right? Level 3 of, rather we are using observable inputs, it will be a level 3 valuation. Yeah, so here we have examples, you can go through that, right? And this is the process we are following, right? What is the asset, which type of technique we are using, and then which input should be used, observable inputs or unobservable inputs. That's the area. And then here is a very important topic, right? Here is a very important topic. Let's say you are going to you are having three techniques: a market approach, cost approach, and income approach. Once you are going to this market approach, once you are going to the market approach, let's say you will be requested to have market price. ඔයා මොකද කියන්නේ market price එක අහනවා වගේ. ඔයාට අග්ගාලා ළඟ කඩේට දුවලා ගිහිල්ලා ඇවිල්ලා market price එක කියනවා. That should be the understanding that we need to have proper understanding over there. Let's say someone asks from you, I need to have fair value for this item. So as a person coming from accounting background, finance background, what is the your suggestion? So අපි හිතමුකෝ නිකන් මොනවා හරි item එක vehicle එකක්, or let's say sometimes it may be uh, let's say vegetable, let's say sugar, වට වගේ අහනවා sugar වල market value එක කීයද කියලා. So you can't go to this your nearest shop and you can't get the price, right? So we need to understand what is the principal market. So we need to get the value from the principal market. Principal market is a holistic concept. To you, your parent, your friends, everyone, the principal market of this item is one market. So you have to get the price from that market, right? First, we need to understand that that item having a principal market or not, right? Principal market, there's a definition how you are going to identify that, right? So that is a market which is happening more transaction around that country about that item, right? Sometimes you may not participate to that market, so not your performance, right? But the item, that related item, the performance will be evaluated, right? You need to decide the principal market and then get the price and use the valuation. Sometimes you will be stuck to identify the principal market. Sometimes you will be difficult to identify the principal market. Then and there, what you are going to do? Then what you are going to do? Then definitely you need to evaluate what is the most advantageous market is. Most advantageous market. Most advantageous market is specific to your entity. Principal market holistic to the world, but most advantageous market relevant to your entity. Once you are deciding most advantageous market, definitely you need to consider transaction cost and the transport cost both. Transaction cost and the transport cost both. Keep remember that. Why? Why? To decide most advantageous market, you should consider both transaction cost and the transport cost, right? But once you are selecting the market, once you are arriving into the fair value, only you have to use transport cost only. Once you are getting the fair value, transaction cost is the not element of fair valuation. Fair valuation, a transaction cost is a not element, but transport cost is element. We need to deduct that transport cost. Transport cost also is specific to that item, right? කවුරු ගත්තත් ඔයා transport cost එක incur කරන්න වෙනවා. But ඔයා transaction cost එක depends. Maybe your commission, maybe some broker charges. This transaction cost maybe differs with the transaction to transaction. It is not the element of the fair value of that item. So because of that, transport cost is is an element of fair valuation, but transaction cost it is not. But both costs should be evaluated, should be considered once you are deciding your most advantageous market. Keep remember that, right? I hope those uh, concept are clear, right? Having this background foundation, it's very easy to go through this content, right? Right. Uh, yeah. So that's what we discuss. Determining for the perspective of reporting entity. This most advantageous market is specific for reporting entity, right? As I said, not measuring fair value. This is because transaction cost is a characteristic of the transaction. We are not getting transaction cost for once you are doing fair valuation. Keep remember that. Okay, right. And then once you are having non-financial asset, that's also important. So once you are having non-financial asset, non-financial asset mean, so the financial asset mean if we are having a right to receive cash in future, near future, we call as financial asset, right? If we are having non-financial asset, maybe a land or building or type of a vehicle or inventory or something like that, non-financial asset. Once you are doing the fair valuation for non-financial asset, what is the concept we need to follow? Highest and best use should be selected. Highest and best use should be selected. Let's say you are doing a valuation for a type of a land, right? 15, maybe 20 purchase land, maybe in Colombo 7. But there's no any building or any property over there. They're using that land for a type of a be a park, right? Parking purpose they are using. They are putting some vehicles and they are getting rent. So you supposed to do the fair valuation for that parking. So how you are going to do that? So once you are using as a park, the value for that asset may be very less, right? So fair value mean the future present value of future earnings. That's the fair value, right? Basic concept is that. So future earning of the this what do you call that car park may be very less, right? But we need to consider not the car park return, highest and best use. So you are using as a car park, but we can come up with a story building here, and we can give apartments to outsiders. So that is technical feasible, financially possible, right? If it is so, we have to use highest and best use for the fair valuation. So that's the standard definition, right? Standard guideline. Keep remember that, right? Keep remember that. So for that, to get highest and best use, it should be physically possible, legally permissible, and financially feasible, right? Financially feasible. Keep remember this technical stuff, and then we are moving to some disclosures, right? Once you are doing this fair valuation, this fair valuation method, and then levels, the inputs, as well as profit and deviation, sensitivity, valuation model, all the things should be disclosed, right? Valuers details, if you are using a type of external independent valuer, definitely the information, qualification, all the things should be disclosed. Not only that, this inputs, not only inputs, we need to give the sensitivity of the inputs as well. Let's say you are using purpose value. Purpose value, if it is getting changed 10%, what's the impact to the PNL? What's the impact to the balance sheet? We need to give that sensitivity as well, right? So then, uh, yeah, disclosure is very important according to the standard, right? Okay, so I think I gave a brief understanding about the Silparis 13 definition, right? You know that the transaction between market participant about asset or liability, uh, having an orderly transaction, the transaction price between market participant as a measurement date we call as fair value, that can be measured by using three different techniques: market approach, income approach, and cost approach, right? For that we can use observable and unobservable inputs. The amount of observable and unobservable input, according to that composition of inputs, we are dividing that to level 1, level 2, level 3 valuation types, right? And uh, once you are doing market approach, you have to use the principal market. If you don't have principal market, you have to go to the most advantageous market. If you are using a type of a valuation model, definitely you have to give that disclosures very carefully. And then let's say if you are uh, using non-financial asset valuation, you have to use highest and best use. And once you are doing about this process, you have to do proper disclosures as a accountant, and as auditor we need to audit that, Now we are going to learn how we are going to audit this process after doing this activity by the finance division. Once you are going as auditor, how you are going to audit this? That's the question. That is a process we need to learn. The approach we should learn, right? So that's what, yeah, that's the background. That's the startup for fair valuation auditing, right? I hope that is clear. Anyone that confirm that you are clear about that? කට්ටිය පොඩක් කතා කරන්න නේද? ප්‍රශ්න තියෙනවා නම් අහන්න පුළුවන්. Okay? නේද? නැත්තම් දන්නේ නේද? අපිට ෆිසිකල් ක්ලාස් එක කරනකොට නම් I really interesting. Okay. So one student telling that clear, sir. Okay, cool. You can talk, right? Don't worry about that. කට්ටිය වරදිනවා කියලා හිතන්න එපා. යාළුවෝ තමයි ඉන්නේ. You can ask questions, right? That's very important. Right. So we can start how we are going to audit this, right? And we are referring very specific standard SLA US 540, right? 540 accounting estimate auditing, right? Estimate auditing. Fair valuation is estimate. Keep remember that. What do you mean by estimate? Estimate, we have a separate standard, right? What is that? Case 37. Am I correct? Yes. Estimate, contingent liability, contingent asset, estimate, right? So once you are having estimate, uh, definitely we are having uh, a value, right? Value. There's an uncertainty about the value, but we are giving a value to that. That's, we don't have the exact value. So fair valuation also estimate. Once you are getting a balance sheet, right, or P&L, maybe a balance sheet, maybe 90% balances, maybe estimates. It depends on the industry, right? Your PP&E, your inventory, your tax liability, and then uh, maybe biological assets. Most of the asset liabilities are financial instruments. Most of the asset liabilities containing as a estimates, right? From this estimate, we are today discussing about what? Fair valuation. Through fair valuation, we are giving value to that estimate, right? So our auditing standard is SLAUS 540 for fair valuation. Keep remember that, right? Under that, we are having several definition: estimate uncertainty, right? Management bias, management point estimate, right? We are having several definitions. Please read through this definition. I don't think that these are very difficult concept, right? Uh, this auditor's point estimate or auditor's range, an amount or range amounts respectively developed by the auditor to evaluate a management point estimate. Sometimes management giving a value according to their perspective, auditor doing a valuation independently and their perspective, and then we need to evaluate the variation and reasonability, right? That's called auditor's point estimate or auditor's range. We can identify a range, right? Normally for estimate, we are giving a not a value as auditor. We are giving a range. That range, in between that range, that item should be included. So classic example, once you are doing insurance contract liability valuation, we are giving a type of a corridor, type of a uh, type of a range. In between this lower value and the higher value, in between this, the amount should be uh, showcase. Amount should be located in between that range, right? That is called auditor's points estimate and auditor's range, right? Always estimate having uncertainty, right? Uh, so that's the inherent limitation of the estimate, right? Around this, there may be several management bias. That's why we are having a separate topic here, right? So as auditor, we need to worry about this fair valuation because of the management biasness. Many biasness may be having around this. Because of that, we need to have a proper risk assessment and basically audit approach for estimate, right? Okay, management point estimate mean management for their perspective they are doing estimate and they are disclosing that in the financial statement. You need to evaluate that. Those are the definition in the standard, and then I have mentioned here some of the example for the estimates, right? I don't want to explain each and every one. So some of them relate to fair valuation. So we need to pick that and we need to go through that. Uh, Basically, how we are going to do auditing, right? These are the example for estimates, right? And then uh, do I need to explain this? No, no, right? The property, plant, and equipment, valuation of infrastructure asset, valuation of financial instruments. For that, we are doing fair valuation. Outcome of pending litigation, provision for expected credit loss, impairment, right? All those things are warranty provision, gratuity provision, share-based payment, fair value asset liability required business combination, goodwill impairment, right? Most of the cases we dealing with estimates, right? We are dealing with estimates. So most of the estimates we are doing fair valuation. That's a relationship between these estimates and fair value, right? Value will be decided based on the fair value, right? Classic example, this financial instrument. What are the two methods we are valuing financial instruments? Anyone can tell me? I think you may be expert on financial instruments, how we can measure. හරි කියන්න පුළුවන්ද? මමම කතා කරලා හරියන්නේ නැහැ නේ. Anyone can tell? So financial instrument can be measured, financial asset can be measured, amortized cost over the fair value, right? Amortized cost over the fair value. Fair value can be recorded in two ways: fair value through OCI, fair value through P&L, right? These are the three financial assets we do have. Financial instrument measured at amortized cost, financial instrument measured at fair value through OCI, financial instrument measured at fair value through P&L. These are the three types of financial instruments. Types, you know, price. These the types demarcated based on the measurement basis. Very easy to identify and understand. The previously before syllabus 9, the financial instrument type and the measurement basis are two different things. So you should keep remember these things. But fortunately, now types are similar with the measurement basis. Keep remember that. So give me 5 minutes. Right. I think I'm audible. Actually, I changed the place. That's why I took time. So I was discussing about. Can you all see my screen? Hope it is visible.
Now, not the slides, Mr. Chiranga, but the Zoom window is visible. Now the slides visible.
Right. Okay. Go ahead. Cool. Right. So I was discussing about this different areas you are having fair value, right? Uh, so having that understanding is really important once you are getting a balance sheet or PNL or maybe whatever the area you are focusing fair value. You should have an understanding about whether it is use the fair value or not. Without having that understanding, you can't do that risk assessment for that audit perspective. So that's why I'm explaining here. So these are the possible estimates that can be that can use for fair valuation, right? And once you're having this estimate standard, it's very clear that, right? Uh, so it is clearly mentioning this guidance about the responsibility, right? And SLFRS, SLA US 540, it's clearly uh, mentioning that it is an auditor's responsibility to perform audit procedures and collect appropriate audit evidence relating to the estimate, right? And then uh, we need to verify the data assumption they use, method they are using, right? uh, we need to ensure that these numbers and valuation techniques or observable inputs are correct. Okay. And then management point estimate mean, as I mentioned previously, management doing their estimates based on their inputs. So as auditor, what we need to do is need to do type of a independent valuation over there, right? Then you can come up with your value. Then and there you can argue with them whether is the reasonable value is there or not. So for that part we need to do it. We should have a proper audit approach for estimate, right? Under this estimates, fair value is a fair value is a 90%, maybe 80%. I can't give a value. The fair value aspect will be there once you are having an estimate. Once you are getting your estimate, you are doing fair valuation, right? That's why I'm, combining these two concept. And now we have comfortable with the accounting guideline as well as the auditing guideline. What is the accounting guideline? SLFRS 13. Majority SLFRS 13, right? SLFRS 13 නැතුව වෙන ස්ටෑන්ඩඩ් තියෙනවද මේක ස්පෙසිෆිකලි කියපු? Yes. Inventory වල කියනවා fair valuation ගැන. In other words, right? NRV, net realized value. අපි ඉන්වෙන්ට්‍රි කොහොමද වැලියු කරන්නේ බුක්ස් වල? ඉන්වෙන්ට්‍රි කොහොමද වැලියු කරන්නේ? ආ NRV and cost, whichever is lower, right? NRV and cost and NRV, whichever is lower, not cost or NRV, right? There's a significant difference between cost and NRV and cost or NRV. Okay, we need to cost and NRV. Once you are getting NRV also a type of a not a fair valuation. It's again estimate. This type of a future expected selling price fair, net realizable value. It's type of a fair value, right? But it is specifically that guideline was given in LKS 2. Because of that, for inventory, we are not using SLFRS 30. Okay, then that fair valuation will be based on LKS 2. Okay, that's why I'm telling majority of the fair valuation we are using SLFRS 30, but some specific standards may be there, some specific standard may be there, that fair valuation will be highlighted. Give me a second. Hello. Yes. Hmm. දෙකම ඕන මට වෙරිෆයි කරගන්න මට දෙකම නැතුව බෑනේ for 2 months මට සෙප්ටෙම්බර් maybe මාර්ච් ඒ දෙකම අවශ්‍ය වෙනවා ඒ කියන්නේ ඩිඩක්ෂන් වලට අප්ලෝඩ් කරපු එකයි deduction වලට upload කරපු එකයි and then the results ඒ කියන්නේ actual deduction is what and the uploaded amount is what if there's a difference මට ඒකත් බලා ගන්න ඕන ඔව් ඒක දෙකම නැතුව බෑනේ මම දැන් එකක් ඉල්ලුවොත් ඒක ඒක අරගෙන ඊට පස්සේ මම ඊළඟ දවසේ ඊළඟ එකත් ඉල්ලනවා මම try කරගන්න ඕන net amount should be verified right හරිනේ හා හා right okay right all are auditing right. So that's why I didn't mute that. So you need to listen. So auditing is art. You can select that as a profession for your job, right? That's really good. But within the job, we may not having that. As I said in that first lecture, these comments sometimes our customers, auditors customers are not willing to get that service. That's a uniqueness with other services. If you are a lecturer, students are willing to get that knowledge, right? If you are a doctor, patient is ready to get that service. Yes, if you are maybe a lawyer, your client ready to get that service, they are waiting, right? They are ready to pay. But if you are auditor but this auditee is not that happy to get that service, they are counting down their fingers till we are finishing the service, right? That is difficult then. But if you have that passion and interest, we can do it. And it's a different interest. We don't have comments, positive, smiles, stars, good, flowers. We don't have anything. We don't have thank you, good morning at least, right? But here we are having a very different, taste of auditing. So if you are interested, definitely you can, select this profession. That's very important. Okay. But why we are learning then if you are not selecting this subject? Why we are learning this? Is that a useful subject, or we are learning because we are having this subject and to get a plus? So sorry, we to get a first class, we supposed to do this subject, and that's why we are learning. No, no, no. So we are learning. We may not be the auditor. Maybe 95% you may not be auditor, but 5% there's a chance to be auditor. 95% you will be auditee, right? Near future. Whatever the task you are doing as accountant, that will be there will be an impact to the financial statement that will be audited. you will be requested that evidence. You need to keep that up first day onwards. Otherwise, once you are starting the audit at December, the transaction happened in February, you can't search this evidence, right? So you should have understanding of auditing, right? If you can learn this auditing subject, then and there it will very helpful to you to face to your future. That's why we are learning that, right? Once you are learning that in a passion, definitely your marks, your results may be a byproduct, right? Keep remember that. So you should learn this as a passion, okay? Right. So we know two different guidelines, now very easy to understand. But now we know accounting standard, now we know auditing standard, SLFRS 13 and SLAUS 540. That's how we are going to do it, how we are going to fair value, that's SLFRS 13. How we are going to audit fair value, SLAUS 540. Keep remember, having that understanding, we'll go to audit fair valuation, right? Okay, cool. So here, this is the uh, approach, right? Approach. And uh, then here we are having the auditing. uh, Auditing basically the steps, right? Fair valuation, uh, related audit step commonly, right? As I said, fair valuation is a common concept we are using for different asset and liabilities. So we can't say specifically, right? For your exam, the examiner may have millions of fair valuation examples, right? But you can't remember all these steps for each and every area. But you should understand the common approach of auditing fair valuation, that is in line with estimate auditing. That's why I have mentioned the estimate audit approach, right? Estimate audit approach has mentioned here. First, what we need to do, first part we need to do, first we need to assess the risk. Keep remember that. First one, assess the risk assessment procedure. Risk of misstatement relating to that is the estimate fair value. Risk of misstatement, what is that? Inherent risk and the control risk. Inherent risk and the control risk should be evaluated. And then the process we are using for that estimate, the process we are using for that estimate, we should understand. Example, let's say you are using maybe biological asset, or you are having a coconut plantation, right? Coconut plantation, what is that? Coconut is a bear a biological asset, am I correct? Yes, it's a bear a biological asset. uh, we we are scoping out from LKS 41. We are following LKS 16 for bear a biological asset, right? It's a bear a plant. For bear plant, we are having two options: cost model or the fair valuation model, revaluation model. We can use revaluation model. If you are using for coconut plantation revaluation model, what are the things we need to consider? We may have matured plantation. We may have immature plantation which is not having coconut. The matured plantation, as at a date, you may have coconut on the matured plantation, and sometimes under the tree you may have some coconuts, right? So those are the things you need to do the fair valuation. For that, what we need to have first? First, you need to do the risk assessment of valuation. Okay. So what is the inherent risk? What is the control risk? Once you're analyzing control risk, definitely you should evaluate the control environment of that. For that, you need to understand the process they are having to do the valuation. once you are doing the estimate of fair valuation, what is the process management using for the fair valuation? That should be studied. That process, company to company, industry to industry, person to person, may be changed. But generally, what we need to do is you need to understand the process of fair valuation. Keep remember that. Okay, two step: understand the risk and identify the process. Okay, and then developing an independent estimate. What do you mean by that? So you can understand the process, you can learn it, and then you can evaluate, you can come up with a value, independent value for that, and then you can cross check the reasonability. That's very important. Okay, second, third one. The fourth one, reviewing subsequent events. Why we are doing subsequent event review? Subsequent events relates to backtesting as well. Backtesting as well, right? Backtesting as well. Uh, you are doing type of evaluation, and you can check the subsequent events whether the evaluation is correct or not. Okay, so you are doing valuation as at 31st maybe December 2025. 2025, the subsequent year, maybe you are finalizing audit these days, maybe end of March you are finalizing the audit. You did the valuation for land, right? You got the fair valuation, but recently we sold that land. We sold that land for a very, very lesser price. In the books, you may have very higher price. The subsequent event after the reporting date, giving a value, giving evidence for that valuation, right? You don't need to adjust that, right? It's a new information. You don't need to adjust it, but it is giving some indication of the accuracy of that. You need to be very alert, be careful about the subsequent event of that fair valuation. Keep remember that. If you are doing a fair valuation, the subsequent event should be evaluated, right? It is not adjusting. It is not adjusting event, but you need to re-look at your process. There should be a reasonability. Okay. දැන් මෙහෙම ප්‍රශ්නයක් එනවා. ෆයිනෑන්ෂල් සයින් කරන්න කලින් ලෑන්ඩ් එක විකුන්නම ඒ ප්‍රයිස් එක අපිට බැක් ඩේට් ගිහිල්ලා ඇඩ්ජස්ට් කරන්න පුළුවන්ද? What do you think? We can't do that. So as at the reporting date, we have to do the fair valuation, right? Subsequently, if it is selling to a different value, that can't be, that is a realized value, right? If you're having the realized value as at the reporting date, you are not getting the fair valuation. You have done the fair valuation, that should be reasonable. So if you are having the realized value subsequently, go back and adjust your input sometime. Reassess your fair valuation techniques, but you don't need to get that same value you sold it out. Keep remember that. Okay, right, I think it is clear. So subsequent event, you have to be very careful, right? And then disclosures, obviously, as I mentioned in SFRS 13, there may be several disclosures. You know that disclosures, number of disclosures may be depend on your composition of observable and unobservable inputs. If you are having more unobservable inputs, you may have more disclosures, right? The model techniques, everything should be disclosed. So I will show you some disclosures. Very lengthy disclosures may be there if you are having unobservable inputs or model type of things for the fair valuation, right? Okay, cool. Right, we can go to the other steps. Disclosure, addressing management bias, and then use expert backtesting, documentation, and communication. So those are the basic steps, right? This is very the useful, addressing management bias. So if there's any judgment, any selection, we need to evaluate that. Whether we need to have proper understanding of whether management is biased or not, right? And use of expert. Let's say once you are doing fair valuation, you are using expert. Maybe a land valuation, you are using a valuer. Maybe a biological asset valuation, you are using another expert, right? Likewise, you can use different experts. Once you are using experts, that person should be independent. Keep remember that a company can't use its owner's spouse valuation firm for the valuation task. They ඔයා කොලිෆයිඩ් වෙලා මේබි අඩිග්‍රියක ඉවර කරලා වැලුවේෂන් එක්සෑම් කළ වැලුව කෙනෙක් වෙනවා. එතකොට ඔයාගේ පේරන්ගේ කම්පැනි එක වැලුවේෂන් එක වාට කරන්න බෑ. You may not be independent. Why? Your parent, your father may tell that I need this value and you are giving that value without considering the scenario. Because of that, the valuer, expert, whatever the expertise you do have, you have to be independent. Keep remember that, right? And then the qualification, the experience on that field, right? The person who are doing valuation for maybe a land or type of a property can't use for the biological asset valuation, right? Can't use for coconut this paddy field valuation or type of a poultry farm valuation or the goodwill valuation or type of a actuarial valuation, right? Maybe insurance contract liability. So the valuation expertise uh, knowledge should be there, and that should be very you know uh, required element, right? We are selecting a proper valuer uh, based on the expertise. The and expertise knowledge will reflect their qualification. Qualification තිබුණා කියලා ඔයා expert කෙනෙක් වෙන්නේ නැහැ. You need to check whether they what are the things they have done, what are the past jobs they completed. So getting better to get some referrals, right? Some the profile information about the jobs they have completed. So it will reveals that the competency and their reasonability of their skills, right? That should be ensured. And then we have separate auditing standard on that. The getting support from experts, right? Maybe a management expert or a audit expert, right? So we need to evaluate their capabilities, independence, and everything, and we need to properly document. And keep remember that once you are getting expert support, you can't uh, deviate from your responsibility as auditor. That's the learning point, right? You can't say that it was done by expert. I'm not, I don't care about this. Uh, that was done by expert more than me, so I'm getting that value. I'm not going to challenge that value when I'm getting the exact numbers to the financials. I'm giving the audit report. You can't say that. Once you are issuing the audit report, that value, the responsibility of that value with you. You need to verify that whether that valuer has done. Yes, agree. You are not the expert on that area, but you have to perform your audit procedures. You can check his qualifications, experience, and the valuation model. You can cross check with the other valuers model, right? You can perform that activities, right? You can perform that activities and verify they have done a reasonable job, and have they done an adequate disclosure according to the standard. That knowledge you should have, right? Not the expert knowledge, but you can perform that activities and then you can easily verify that. So having that, by completing that, the responsibility with you. Keep remember that. That's very important, right? And then back testing. That's very important area. Back testing mean what? Back testing. Back testing mean uh, very important procedure. Once you are doing type of evaluation, and go back and see and whether it is correct. Basically, this will be very helpful for the estimate, maybe provision type of thing, right? Let's say you are doing a provision, uh, s- today you are having a write-off, and go back and see whether your provision is adequate. That is called back testing, right? So if it is adequate, it will give a kind of a comfort to your estimation, fair valuation process. That is called back testing. So keep remember these common activities, and after doing all these things from risk assessment, process identification, and then model validation, disclosures, inputs evaluation, everything should be properly communicate and document. Keep remember, not documented, not done. You can't sacrifice your efficiency for maybe you can't sacrifice your documentation for your efficiency. You can't tell that because of the deadline I couldn't make it proper documentation, right? What you have to do is you have to do proper documentation on the task you are doing. Otherwise, not documented, not done. As a good auditor, if you want to deliver a quality audit, documentation is a key, very critical element you need to maintain. That is a part and parcel of audit quality, right? So we discussed about audit quality and audit documentation. We discussed in detail in last lecture, right? Lecture number 3, I guess. What's the importance of audit documentation? Keep remember that once you are doing estimate and fair value audit, that is relevant, right? That's why each and every auditing standard we have different paragraph for the documentation. It has given kind of a good very priority to auditing standard documentation, right? Cool. And now we know estimate process. Once you're going to the fair valuation, these are the things same like previous steps. Understand the management valuation process. Identify asset liabilities measured at fair value. You have to identify what are the asset liabilities during the fair value, evaluate internal control over the valuation, test valuation models and assumptions, recalculate fair value independently, use external expert if needed, review market data and comparables, check classification in fair value hierarchy, verify disclosures, obtain written representation, and do the proper documentation. So these are the common procedures. දැන් මේ ටික ඔයා පාඩම් කරගත්තා නම් ඕනම fair valuation එකට මේ ටික තමයි දාන්න තියෙන්නේ case study එකට customize කරලා, right? If you are having a fair valuation type of a arrangement in that organization, check that what are the areas they are using fair valuation, and for each and every area use these steps. So මේ steps ටික ඔයාට මතක තියාගෙන ඉන්න පුළුවන් නම් customize this and come up with audit procedures. These are the audit responses, right? Audit procedures, audit responses. Audit steps කියන්නේ සාමාන්‍යයෙන්. අපි auditing language එකෙන් තමයි audit paper එක ලියන්න ඕනේ. That's really important. You have to use audit jargons, buzzwords for auditing subject. You can't use layman's language for auditing subject. That's a critical aspect I emphasized in last lecture as well. Okay. Uh, Once you are writing your answers, definitely use these words. Okay. And these steps you can count down without seeing this screen. What are the things we need to understand? The process, understand the valuation technique and the model inputs, and if there's a value expert, use it. And independence, you need to evaluation, and the input should be verified. If you are using observable or unobservable input, you have to verify it, and then evaluate the do the independent calculation and cross check with the balance, right? And identify the hierarchy level 1 or level 2, level 3, and adequate disclosures. All those things should be evaluated as a auditor. So those are the steps. Keep remember that. Right. And what else? Any doubts, any questions? මේ ටික ඔයා හොඳට මතක තියාගන්න. These are the steps we need to follow if you are having a fair valuation, fair value audit, right? And then once you are having any judgmental area, like let's say, example, once you are doing investment property, biological asset, financial asset, retirement benefit obligation, you may have assumptions, right? Selection. You should have a proper judgment, right? This judgment should be disclosed separately. This judgment should be disclosed separately. This assumption, accounting policy, as well as this sensitivity, all the things should be disclosed. That's very important. Once you are doing fair valuation, there may be different judgments which will be used for your calculations and other type of adjustments. Judgment will be used, right? There may be many selections basically as a management. Once you are doing your selection, you have to have a judgment. නේද? ඔයාගේ ලයිෆ් එකේ ඩිසිෂන් ගන්නකොට ඔයාට එක සිලෙක්ෂන් එකයි නම් තියෙන්නේ. ඔයාට ජජ්මන්ට් එකක් ඕනේ නැහැ නේද? දැන් ඔයා හිතනවා මැරි කරන්න යනවා. ඔයාට තියෙන එක සිලෙක්ෂන් එකයි. ඔයාට එයා හොඳයිද නැද්ද කියලා ජජ් කරන්න ඕනද නැහැ. ඔයාට එක ඔප්ෂන් එකයි ඔයා මැරි කරනවා. නේද? එතකොට මැනේජ්මන්ට් ඇයි ජජ්මන්ට් වලට යන්නේ? මැනේජ්මන්ට් එකට තියෙනවා inputs ගොඩක්. You may have several inputs, several options. You should have assumption and take a judgment, right? Assumption differs with the judgment. You may have different assumption. You have to select one relevant assumption. That is your judgment. Understood? ඔය හොඳට තේරුම් ගන්න. සමහර ළමයි තේරුම් ගන්නවා assumption is the judgment. No. Once you are doing your fair valuation, you may have several assumptions, right? Several inputs. එක්සාම්පල් එකක් ගත්තොත් නේද? ඔයා ලෑන්ඩ් එකක් වැලියු කරන්න යනවා. ඔයා හිතනවා ඔයාගේ ගමේ ඔයාගේ ගෙදර ලෑන්ඩ් එකයි බිල්ඩින් එකයි වැලියු කරන්න යනවා. හරිද? ඔයාට assumption තියෙනවා ගොඩක්. ඔයා මොකද්ද? ඔයා මේකේ assumption ගොඩක්. ඔයා මේක sell කරනවා කියලා assumption එකකට එනවා. ඔයාට තව assumption එකක් තියෙනවා. ඔයා මේක තව property එකක් හදනවා කියලා. right? තව assumption එකක් තියෙනවා මේකේ ඔයා lease කරනවා කියලා. right? ඔයා තව එකක් තියෙනවා rent කරනවා කියලා assumption. ඔයා assumption ටික පේලියට තියලා ඔයාගේ best assumption එක select කරගන්න. That's your professional judgment, right? The selection of your assumption is a judgment. So as auditor, management has done several judgment for their betterment, not the financial statement users betterment, right? They are not thinking about the best presentation in line with standard and all, right? What they are doing, they are selecting the assumption, they are leading to the assumption based on his professional interest. Not professional interest, sorry, it's your personal interest. So showing big picture, showing a type of a high performance in the organization, they may have higher bonus. Because of that, he's selecting a different judgment that may be the least prioritized judgment. Understood? I think you can understand, right? So as auditor, you need to evaluate whether they have used correct judgment or not. That's very important, right? That's very important. Keep remember that once you are doing fair evaluation, there may be several options. You need to evaluate whether they have selected correct assumption. That is a judgment. Okay? That judgment, that selection should be, once you are doing independent calculation, that should be done in your professional judgment, not the judgment used by the management. Then you are having two calculation. Management did this calculation based on their judgment. You are doing a calculation based on your judgment. After completing your calculation, fair value calculation, compare with the management calculation. If it is reasonable, or as it is match කරන්න යන්න එපා නේද? ඔයාට එනවා 50,000. ඔයාට එනවා management value එක 50,000 ඔයාට එනවා 52,000. ඔයා කියන්නේ නෙමෙයි මට 52,000 ඔයා adjust කරන්න කියලා. But it's reasonable, right? Based on the value you can understand. Based on the materiality. That's the materiality කියන concept එක එන්නේ එතනට. අපි දැන් දන්න ඔඩිට් ප්‍රොසෙස් එක කතා කරන materiality. Material levels කැල් කරා අපි නේද? Planning materiality, tolerable error, trial value, sad amount, right? Materiality එන්නේ ඔන්නතනදී තමයි. නේද? ඒ deviation එක material නැද්ද කියලා conclude කරන්න. That's your part. That documentation perfectly should be documented. Your judgment, right? I hope that is clear. And then here we have several valuation areas, right? Normally, if you are having a significant risk, right? Significant risk. What do you mean by significant risk? Risk, significant risk එකක් වෙන්නේ මොකක්ද? කොහොමද? Risk එකක් කිව්වේ මොකක්ද? Once you are doing auditing, you may have a risk. Risk mean you are doing risk-based auditing. The possibility of deviation from your expectation. What's your expectation? Issue a correct opinion. If you are issuing an incorrect opinion, that's audit risk, right? That's audit risk. Basically, once you are issuing the audit report, if you are having a significant risk, what do you mean by that? Significant mean so high frequency and magnitude that the possibility of risk of misstatement, the frequency is high. If it is happen, the magnitude, the impact may be high. If it is so, we call as a high risk estimate, high risk fair value. If it is high risk fair value estimate, it will be a key audit matter. So I have taken here several fair value related key audit matters. I hope that you are comfortable with key audit matters, CAMs, right? It's a part of a audit opinion, right? Audit opinion. So those are the areas auditors spend more time and they are performing procedures. And if you are having fair valuation within the organization, definitely that will be a CAM, key audit matter. So if it is a company having biological assets like this, this is a CAM. This is a CAM uh, of a biological asset. They are a biological asset. Uh, they are having birds, right? They are having birds. You can see the reason for key audit matter, right? Mentioning here and the inputs, right? You can see the inputs. You know the composition of a CAM. Here we are mentioning why is that a CAM, right? Why it is a CAM. This area, why is a CAM? And then these are the judgments and inputs, right? For fair valuation of birds, right? Or fair value කරන්න යනවා නන්නේ biological asset fair value කරනවා නම් they are a biological asset. Let's say Bairaha farms, let's say nail farms. Farm එකක් නවා audit කරන්න නේද? ඔයාට valuation එක critical. So you are having parent birds, right? Parent birds, grandparent birds, right? Uh, Sometimes you are having boiler birds as well. Boiler birds is a consumable biological asset, right? Parent birds bear a biological asset, right? Consumable biological asset, bear biological asset. Bear biological asset mean as a biological asset we are using more than 1 year for getting biological outcome, biological transformation, right? But through biological transformation we are earning money more than 1 year. If it is a bear animal. So in a farm, if you are having parent birds we are using more than 1 year. If it is so, we have to use a fair valuation model, right? Fair valuation model. Once you are having fair valuation model, what are the inputs we need to use? Maybe hatchability, mortality, and egg pattern, right? Egg pattern. So here we are having this day old chick price. Those are the inputs, right? Those are the inputs. Is hatchability rates of egg, mortality rates of egg, and then day old chick price, and all these things are inputs. නේද? ඒක කියනවා එක් පැටර්න් එක බලන්න ඕන. නේද? අපි මොකද කරන්නේ? බර්ඩ්ගේ fair valuation එකක් කරනවා. net present value එක calc කරනවා. එතකොට what we need to do? We need to forecast the birds cash flow, cash inflow and cash outflow. දැන් ඔයා හොඳට හිතන්න බර්ඩ් කෙනෙක් අරගෙන බර්ඩ්ට cash inflow මොනවද? cash outflow මොනවද? Do the present value and the calculated value. For that, what are the inputs you are using? These inputs should be valued and calculated and disclosed in the financial statement. And not only that, we need to give the sensitivity analysis as well. Okay, levels of fair valuation, levels, hierarchy should be given, right? Yes, as accountant, you have to do this. What can be? Mama vegetarian, mama meat, ගැන මුකුත් කතා කරන්න නැහැ. මම එහෙම ඔඩිට් කරන්නේ නැහැ කියලා. නෑ. ඔඩිටර් කෙනෙක් විදියට නේද? ෆාම් එකක් ඔඩිට් කරන්න හම්බුණා නේද? Maybe a coconut estate or a farm or a hardware or a type of a garment or a hotel or a insurance company, whatever the thing, you should have expertise, auditing ability, right? Wherever you are going, fair value may be there. So fair valuation audit techniques, very important to learn, right? So without going further, so coming back to the topic, so once you are doing this birds fair valuation, what are the inputs? Or bird cash inflow and cash outflow, you need to decide. Cash outflow, so then you are purchasing a small chick today, it's a cash outflow. Chick කෙනෙක් අපි ගමු හිතනකො 40 rupees කියලා. ඔයා දැන් chick ගත්ත දවසේ ලෙග් දාගෙන යනවද? නැහැ. chick ලොකු වෙන්න ඕන නේද? chick let's say chick egg lay කරන stage එක එනකොට එන්න it will take more than 35 weeks. Up until 35 weeks, that small chick will grow. To that level, you are having only cash outflows, purchase price and vaccine, foods and safety protocols, right? So environment and everything should be fixed. It's a cash outflow. Till 35 weeks, you are having a cash outflow. 35 week onwards, you are having eggs, right? එතකොට egg දාන්න පටන් ගත්ත දවසේ ඉඳලම egg දාගෙන යනවද? නැහැ. In a bird, we are having egg pattern, right? Egg pattern. First week, maybe one egg. The second week, maybe 3 eggs. So they are coming to the peak. Maybe 38, 39 week, right? 39 week, 7 days, 7 eggs, right? එහෙම දානවා. ඊට පස්සේ let's say 80 90 weeks වෙනකොට egg දාන එක තව වැඩි වෙලාද නැහැ. egg pattern එක යන්නේ it's a bell curve, right? So once your eggs getting less, maybe end of the lifespan. එතකොට once that bird reach into 85, 87, 89 weeks, maybe one egg may be laying. That egg pattern will be reduced. That egg pattern, once your egg pattern reduce, that bird will consider as a residual value. Then they consider as cull bird value. ඒක තමයි ඒ bird ල තමයි නේද egg දාලා ඉවර වෙන bird ල තමයි අර නේද market එකට එන්නේ curry chicken කියලා නේද? එතකොට curry chicken value එක meat වලට විකුණන්න පුළුවන්. It is also a cash inflow. So once you are getting cash inflow, how we are going to predict this egg pattern and into hatchability, into mortality, into chick price, right? Plus cull bird value price, the residual value, this curry chicken value price, right? Curry chicken meat price is the residual value. It's a cash inflow. Once you are doing cash inflow, cash outflow, and present value. Once you are doing the present valuation, we need to use a discount factor. What we need to do? Maybe the yield of this farming industry or that particular farm. That will be the present value, this discount factor. So once you are doing present value, that's the fair value you have to use for your biological asset. Keep remember that, right? And that's the one type of a fair valuation. So what are the procedures we need to follow? So you need to understand the process, calculation, model, inputs, and do the independent calculation and levels, and everything should be documented. You have to go through this step. So you can understand this step, right? Tested relevant key controls and understand the methodology adopted the valuation of bare biological asset. නේද? අපි කතා කරපු දේවල් first we understand the method and the reasonableness of the inputs and valuation techniques, right? And disclosures. These are the four steps. Likewise, you should have capability to customize the non-disclosures to the fair valuation scenario. Keep remember that the scenario may be changed. මට කියන්න බෑ නේද exam එකේ එන scenario එක මේකයි කියලා, but similar technique. Keep remember that. Okay, cool. I have mentioned here uh, several examples. Biological asset fair valuation, right? Here, fair valuation of again biological asset, right? It's a bare biological asset. Uh, what is that? Mm, it is a it is a uh, what is this? Thalawakale tea estate. Once you are having tea plantation, tea bushes are bare plants, right? අපි tea bush එකක් consumable plant එකක්. I hope that you are having that knowledge about bare plant and consumable plant, right? The difference between the banana tree and the mango tree. What is the difference between banana tree and the mango tree? You are getting banana from banana tree and mango from mango tree, no? So that is not the difference I am asking, right? So banana tree, at the point of harvesting, you don't have a tree further, right? Banana tree. But mango tree, you are getting harvest more than 1 year. The mango is a bare plant, banana is a consumable plant. So you can understand what is a tea plant, right? Tea plant is a bare plant. Bare plant. For the bare plant, we are using LK16. LK16, we can use cost model or the fair valuation model. If you are using fair valuation model, this is the way you need to do auditing, right? Once you are doing auditing, you need to consider this step. So you can refer this step, you can read that. Without reading, you can say that you can customize your knowledge. Once you are having fair valuation model, independence, this whatever the sorry, this is a retirement benefit obligation, right? This this area, this whatever the methods, uh, uh, valuation method you are using, either whether you are using cost model or evaluation model, and inputs you are using, any model, any expert we are using, independent calculation, back testing, all these common steps should be with you and customize it, and you can come up with a good answer, right? It is not a rocket science, it is very practical, right? uh, Now I hope you can give a proper answer if there's a question, right? And retirement benefit, again fair valuation. Retirement benefit obligation mean you know that once you are having gratuity at the point of retirement, for that obligation we should have a proper fair valuation, right? Why we are having retirement benefit obligation? Otherwise, at the point of retirement, we are paying amount, and if we are putting that into the PNL, that is not reasonable. Why? We are paying retirement benefit obligation for the period they gave the service, right? Because of that, definitely we should have proper provision in proper fair valuation of the defined benefit obligation in the books. For that, we need to have a proper expectation and the prediction of the fair value of the liability. For that, we need to decide the mortality, staff turnover, salary increment rate, everything should be collated, and it is type of a fair valuation, right? I hope that is clear. The same method you have to use, okay? And then fair valuation of impairment of goodwill, that's again same, right? Fair valuation of land and building. For the land and building, the perpetual value as well as the valuer's competency and number of acres and comparable reason sale prices, everything can be tested, okay? And important aspect is the documentation. Keep remember that. I hope that is clear. I have mentioned several examples. We discussed about the steps, several examples, right? Uh, I didn't discuss this goodwill impairment. That is also we need to evaluate the fair valuation of the impairment of goodwill. That's also very sensitive area. Once you are having business combination, you may have a goodwill, right? That goodwill definitely you need to evaluate for the impairment. Okay, for that we need to check the recoverability and value of the goodwill. It will be a forecast, right? It will be a fair value calculation, right? Cool. Once you are doing this fair value estimate and disclosures, you may have different challenges. What are they? So subjective assumptions, you may have different assumption. Management may done different assumption, right? You have to evaluate that. For that also auditor, as auditor you should have a proper capability, as well as management can use different complex models, maybe discounted cash flow model and some type of foreign exchange rate level, different models, right? You have to evaluate that aspect as well. Then market can be changed. Today you are doing fair valuation. Nowadays we are having this war situation in the globe. Because of that, different prices may be changed, right? With the economical condition, political condition, right, may impact to the volatility of the market. Because of that, fair value may change, right? You have to have proper judgment over there, okay? And information limitation, some of the information may not be available to evaluate, and expert areas may be there. So those are the challenge. And management biasness may be there. Management trying to always try to manipulate numbers, right? Manipulate numbers. Because of that, it will create a huge uh, audit risk for you, okay? So after having these challenges, whatever the fair valuation, definitely it is an inherent risk about valuation accession. Make Remember that. Once you are having that risk elements are here. When the subjectivity, model volatility, changes, expert involvement, management bias, those are the reason for that risk of the risk behind the valuation accession, right? For that you should have a proper responses. Keep remember that audit responses should lead to that uh, uh, that areas, that risk aspect, right? For that you have to use your skepticism, question in mind, test assumption, validate data, use specialist, right? To reduce that risk, you can use your skepticism, experience, your models, your expert support, internal expert, data analytics, right? Comparability testing, back testing, different techniques can be used to reduce that risk to acceptable low level. Then and there you can issue your audit opinion without a doubt, right? So you are not supposed to issue a certificate. You need to have a reasonable assurance, right? For that you can justify your judgment, your thought process. If it is within your thought process, your judgment, you can issue your audit opinion about the fair valuation. Once you are doing fair valuation, there may be misstatement or scope limitation. Scope limitation mean once you are doing a valuation or model validation or something like that, you don't have information. If it is so, it's scope limitation, right? If you are having any uh, technique or some calculation. This calculation may be very unusual. It is not practical. According to your independent calculation, there's a significant variance. If it is so, it's a mistake. So according to the significant or the pervasiveness, you can qualify, or you can adverse, or you can disclaim. I hope that you are comfortable with this audit reporting, audit qualification and modification, as well as this what do you call that, adverse opinion, disclaim opinion. Accordingly, you can issue qualified, clean, adverse, disclaim opinion relate to fair valuation uh, area, right? Further, you can put a sometimes emphasize a matter, or basically emphasize a matter to the fair valuation as well, if you are not highlighting that as a camp. If you are highlighting that as a camp, don't put a emphasis a matter. So those are the things I want to discuss with you all about this fair valuation techniques, right? Fair valuation of auditing. I hope that this content, now we can come to the content, whether you are equipped with this auditing fair value estimate and disclosure. I hope you are comfortable. Describe the responsibilities of financial statement auditor on auditing fair value estimate and disclosure. Yes, we discussed about the responsibility, right? Standard very clearly mentioning the responsibility of the auditor about estimate, right? We discussed 540 standard. Auditor responsibility is to assess the risk, plan audit procedures, perform audit procedures, gather evidence, conclude, and document. Those are the responsibilities, right? Explain different audit procedures. We discuss the examples, procedures, everything we discuss. Assess the difficulties of auditor to could face the evaluation of fair value estimate and disclosure. We discuss the difficulties and responses. I think you are comfortable with these four areas. I hope you may you got a proper knowledge, not only the auditing process, about the accounting aspect as well. We learned the accounting background, auditing background, practical scenarios, and everything done, I guess. So I hope it is clear. Any questions? So we are having 37 here. Good number. මොන හරි ප්‍රශ්න තියෙනවා නම් අහන්න. ඔයාලා ඔඩිට් කරගෙන යනකොට තියෙන ප්‍රශ්න හරි කමක් නැහැ. So you can ask. Uh, Sorry, I was disconnected. I hope that you got adequate, proper knowledge about this fair valuation, how we are going to do that audit procedures around this fair valuation. So I hope that you can apply this for whatever the given example scenarios. Not only that, whatever the job you are going to perform in real life, definitely that will be audited by a independent auditor. Make sure to that, keep evidence about the inputs you are using for fair valuation, right? As accountant, you have to do fair valuation, right? At that point, you can't say that we didn't have any options, we did by using these inputs, I don't have any evidence, that's what I came to my mind. You can't say that. You have to prove that, right? Your judgment should be justified. For that, you need to keep proper evidence. Keep remember that, right? I hope it is clear for you all. And last lecture, actually, we discuss many areas. I can remember that I had some small part to complete. I will look at that aspect as well very quickly. Give me a second. Yeah, we discuss about fraud aspect, and we just want to highlight this laws and regulations, right? Laws and regulation part, actually I discussed that. I need to recap your memory quickly. Right, actually we discussed about fraud in detail, and we discussed this case study as well. And this laws and regulations, very important aspect, right? As auditor, uh, definitely we need to consider the non-compliance with laws and regulation of the entity. So we are having this NOCLA from 2017 July 15 onwards. CA Sri Lanka also applied this NOCLA, non-compliance with laws and regulations. As auditor, we need to check that non-compliances. Keep remember that, right? That is a guideline, as well as we have a separate auditing standard, SLAUS 250, consideration of laws and regulation in audit financial statement. Once you are doing audited financial statement, that entity should be comply with the local specific laws as well as the general law. Specific laws mean, if it is a bank, if it is a leasing company, insurance company, hotel, there may be specific laws and regulation in that industry, right? Central bank, maybe bank, central bank laws, listed entity listing rules, insurance entity insurance act. There are specific laws and regulations. Other than that, there may be company act, tax regulations, maybe price related regulations. All are common for each and every entity. So as an entity, it should be comply with specific as well as general laws and regulations, right? That should be evaluated by the auditor. Auditor කියන්න බෑ මම financial statement audit කරන්න ආවේ laws and regulations බලන්න මම lawyer කෙනෙක් නෙවෙයි කියලා. But there will be financial implication because of non-compliances, penalties. Sometimes if it is non-compliance, that will impact to the going concern of the entity. Keep remember that, right? So if we are having this type of non-compliances, what we need to do, this is the process, right? I have mentioned here with these arrows. Raise the matter. Once you are identifying that, raise the matter, advise to the management to rectify it, assess the responses which is taken by the management, ensure comply with the applicable auditing standard, and management, if management not taking any decision, so you have that right to take further action. And sometimes you can resign, you can withdraw from the audit engagement as well. So that is a basic process you need to follow. Whatever the audit you are doing, please remember that you need to perform audit procedures to ensure that company is in line with the standards, right? In line with the standard. That's very important. That's very important. uh, Auditor should perform procedures for laws and regulation. Okay, so I think that is also clear. I have mentioned here this the difference, a summary of fraud and laws and regulation 2 is standard 240 and 250. We had detailed discussion with examples about fraud. Today, last week also we discussed about laws and regulation. I want to have kind of a further touch up about this laws and regulation. That's why I want to highlight it. I think that's it for today. That's it for uh, audit subject. I think contribution, my contribution for the subject is over. I did 3 lectures. I focus about this three, not three. Yeah, basically 5 aspect. I can make it to 5 elements. 5 elements mean 5 areas. What are the 5 areas? If you can recall your memory, audit quality, documentation, frauds, uh, and then laws and regulations, fair value audit, right? These 5 areas, I think you are comfortable. Okay, whatever the questions you are getting in the exam, you can, easily you can attempt. So audit quality, definitely that is a key aspect. You need to focus about firm level audit quality as well as engagement level audit quality, engagement or quality reviewer, as well as different aspects of quality management. Okay, uh, all these things very critical. SL, SLQM1, SLQM2. Okay, you need to focus. And then fraud aspect, fraud triangle, fraud procedures, focus that aspect as well. And then laws and regulations and documentation, very important aspect. We discussed about that aspect and we went through illustrative documentation methods, and we had detailed discussion, review process, basic documentation techniques, what are the uh, elements we can use in computer or aid audit techniques. We discuss all this stuff. Not only that, today we discuss about this fair valuation related audit procedures with examples and laws and regulations. So I hope you learn it very practically. And not only that, I discuss about the overall audit process and basic concepts. As I said previously, take this as a one subject, not topic wise subject, right? Auditing is a one process. We may have chapters for management purpose, right? To do lectures and conduct lecturing, we are having different topics, right? So take it as a one process, and wherever process you are leading, wherever task you are doing in audit firms or practical field, have proper understanding what you are doing, what is the link between materiality, conclusion, and opinion. All these things very important. So keep remember that. So have a proper real understanding. Then and there you can easily face to your exam, and whatever the exam in future may be chartered, ACCA, whatever the exam, you can focus these aspect as well. You can use this knowledge for these areas, and hope that is clear. If you have any questions now, you can ask. Thank you. ප්‍රශ්න තියෙනවා නම් අහන්න පුළුවන්. ඔඩිට් කරනකොට ආපු ප්‍රශ්න අහන්න පුළුවන්. මේක කරන්න කොහොමද සර් කියලා අහන්න පුළුවන්. ප්‍රශ්න අහන එක හොඳයි නේද? අහලා දැනගත්තම මාර important. So if you have any doubts, questions, අහන්න. Right. Right. Silence says you don't have questions. I hope that you got maximum out of that. Not required to get 100%. At least if you can get maybe 50-60%, I'm happy. So wish you all the best. We'll see you in future, maybe sometimes advanced auditing or some other, you know uh, interaction. Okay, then thank you. Good night then.
Okay.
Natasha.
Yes.
Okay.
Chiranga, can you hear me?
Yes, go ahead.
Okay, so thank you very much, Mr. Chiranga. I think since this is your last day for this course, I think you did 3 lectures for this batch, and
Yeah.
2 physical and 1 online, unfortunately, because of the current country situation. So actually, I need to mention you wanted to do this physically, but we couldn't accommodate because of the students' schedule and the situation we are having. So thank you very much on behalf of the department and also Ajwad sir. I know right away when we invited you, you accepted our invitation. So that's really great. And I think more than the theory aspects with regards to auditing, you always try to share your practical experience you had. So and even though these people, our students are not asking questions, you always encourage them to ask questions as well. So thank you very much, and we really appreciate your effort.
Thank you. Okay,
Right.
really pleasure and all right and welcome, Natasha. Thank you very much for the opportunity. So yeah, again, thanks a lot. Good night, all of you. If you have any questions, any doubts, or direct that to Natasha, and you can write to me as a summary, and I can reply to you whatever the questions you are having. Let's say you are doing past papers, anything, you can write to me. I can share my email address. I can reply to you all. So let's have kind of a passion to learn, right? So that's very important. If you are whatever the profession you are heading in your future, maybe a definitely you are developing through this stream, the commerce and accounting field, financial field, and you can select different other options as well. Whatever the field you are heading, you are learning, you are going, definitely learning is a very important aspect. Keep learn and develop and use it, otherwise no point. Usage of learning is very important. It will sharp your knowledge and ultimately you can see the real
I think we lost the connection of Chiranga sir. His laptop was about to die, no? So in that case, we'll wind up the session. Ah, yes, I think he's back. Chiranga sir, can you hear us? Right. So in that case, we'll wind up the session, students.
Yeah,
Uh,
Natasha, actually, I
yes. Oh, okay.
disconnected. Sorry. Uh,
Yes.
yeah, thank you very much again. So there was a slight disconnection. Sorry for that. Yeah, good night. I hope you had a good time and with my lectures as well as other lectures content. So as I said, don't take as different lectures, right? Materiality and risk assessment, fair valuation, rules and regulation. No, those are not different topics in audit journey. This is a one element, and relate that to planning, to execution, to conclusion, to the audit report, right? So what is the relationship between audit conclusion and materiality, risk assessment, fair evaluation? Everything should be linked with audit opinion. That's our outcome. How we can ethical and how we can manage the quality. All these things should be aware, and practically you should have knowledge with you. Then and there you can be auditor as well as very effective auditee. So that's the final remarks. Thank you very much. Have a good future. Good night. Thanks.
Thank you. Good night.